Okay, I think I'm here now. Hey, everybody, this is Lorelia. So I'm coming to you with a conversation today. Why it's easier to get a mortgage than why it's easier to get a mortgage than it is business funding. And the reason why I decided to do a video on this topic, I know it's been a minute since I've did a video. I've been helping people, you know, get business credit, get business funding. It's 2021, and so you may have seen my latest video where I helped someone get recently pre-approved for 40K. And so, in this crowded market of business credit and business funding, I thought I'll have a conversation about mortgage loans versus business funding and why it's easier to get a mortgage. I was recently having a conversation with a client, and so we were talking about inquiries. And so, inquiries play a very large part in your ability to get pre-approved and to finally get funding. And you may wonder, well, why is that, Lorelia? Well, understand the inquiries weigh different with you getting a mortgage as opposed to business funding. And I'm going to really go into why is that. I can't speak for what's out there in the marketplace. I can only speak for what I do and how I help individuals. When I help individuals get access to funding, the funding that they're getting is unsecured. And what the word unsecured means is that the lender is deciding to make a decision to get you funding based on your personal financial picture. Meaning, what do you fiscally look like as a person in order to get to the funds? And to really unload that, what that also means is that the lender is really taking a very big risk with getting you the funds. That means they're not asking for any collateral. They're not asking for you to put up your home. They're not asking you to put up your business. They're not asking to put a lien against your business. And understand, everybody in this marketplace who's looking for business funding, they don't understand all the moving parts, because there are lenders who will fund you based on just your business, no PG, no personal guarantee, no looking at your personal financials, and it's strictly going to be on the strength of your business. And I've talked about this in other videos. They're going to look at, is your business financially worthy? Do you have financials? Can you show financials? Do you have revenue and income and deposits flowing in and out of your bank account? Can you show that? Do they and can they get access to your accounting records? Normally, when a lender gives you funding strictly on the strength of your business, they may put a lien against your business. It's no big thing, but understand that they probably will do a lien. And so that's secured business credit, because the lender is securing that in the event that you default on this loan, we can go after the assets in your company or the receivables. So they scrutinize and they look highly and they look heavily on those things. That's secured funding. Remember earlier, I talked about inquiries. Inquiries may not play a large part because the lender is seeing, okay, this business has something. And so in the event that this business or the owner doesn't want to pay us, we're going to go after the receivables. We're going to go after the assets of the business. But I want to come back to what I originally talked about. Why is a mortgage easier to get than a business? Well, going back to what I help people get, unsecured, it's not secured by anything. It's not secured behind your house. It's not secured by a business. The lender is looking at your personal strength. How have you fiscally been as a person with your personal finances? And by them looking at that, they can make a decision if you are worthy. And so one of the things that they measure are inquiries. When a person has a lot of inquiries on their credit report, it shows a level of desperation. And that's why in the space of business credit and business funding, you have people who are out there on looking around, trying to do this on their own, navigating waters that they're not familiar with. And then they come across a lender who gives them a lot of high hopes. Oh, yeah, man, you sound like a great candidate, this, that, and the other. Let me pull your credit. They pull their credit, and now the person has been banged up. They got all these inquiries, and then they're left with nothing. So they were given the ideal situation that they were going to get access to funding. And then the lender pulled their credit, and now they have all these inquiries. And then they come to someone like me, and then they say, you know what? I want to give this another go around. And now they're wondering, well, why can't I get any funding? And then I explained to them, having them understand about unsecured and secured. And so the question came up when I was talking to a client yesterday about mortgages. Now, a lot of times when you get a mortgage, inquiries may play a part, but don't play a large part. It won't kill you to not get a mortgage just because you have inquiries that don't be borderline look, excessive. Well, the reason why is because with a mortgage, similar to when I went into secured business credit, the lender know that there's an asset that's going to be secured. Now, although mortgage lenders, banks, or those or hedge funds or what have you, whoever is lending out the money for you to get a loan, a lot of those individuals or large institutions are not interested in the hard asset. But they do know that that mortgage note that was created when you decide to go to the market to get a loan is going, that there is an asset to protect them. And so they know that in the event that you default, that they have something that they can go after. They have something. See, that's totally different than unsecured business funding. Totally different. Because with unsecured, the lender really have to know, are you worthy of getting access? Sorry about that. Little feedback. Are you worthy of getting access to the money? So understand, inquiries play a large part. They could really be the determining factor of how much money you get or how much access to money you get. And although that's a hard pill to swallow, many of these lenders out here, they will not explain that to you. So what happens is that you go out there trying to navigate these waters yourself, and you can't get to the money. And that's why I say what I do is totally different than what's out there in the marketplace. No shade of what's out there, but understand, individuals who work with me, they start out with getting 5 figures in funding. 5 figures, that's $25,000 or more in funding. We're not talking about a $500 Capital One card. We're not talking about a $5,000 Navy Federal credit card. No shade to those who are getting it. I understand you got to crawl before you walk, but understand this is a whole different, this is a whole different thing that I'm doing. So I wanted to share that because I thought it was a great conversation, and a lot of people need to know that mortgage lending is not measured the same as business funding. Another thing that I just want to point out, and this is just me just talking off the cuff, business funding have the ability for you to create an asset for yourself that generates an income. Although a primary home is great, but we all know, well, we should, if you know the difference between assets and liabilities, although a primary home is great, but it doesn't produce any income. It doesn't produce income. And you don't think lenders know? You don't think lenders know? So that's why, it's very salacious for people to, go on camera, listen to a lot of business credit videos and then kind of regurgitate what other people are saying when they don't really know how to navigate these waters. And what happens is it leaves a person very wishful. And then they come to someone like myself and they're getting the real understanding of what this is like. And it takes work. Is it easy? Yes, but it takes work. Most people aren't willing to put in the work. So, people ask me, well, Aurelia, what is it that you're doing different than other people? I don't know what other people are doing, but I know what I share with people and what I teach people, it is a skill set. It is an understanding, and it will lead you to 5 figures. That's why I guarantee those who work with me and are coachable, because everybody's not going to be coachable, because most people come in this with the understanding, oh, I got this credit score and I don't know why I can't get to the funding. If you got a particular credit score, whether that's 700 plus, and you still can't get 5 figures in funding, there's something that you don't know. There's something that you don't know. If you're trying to invest in real estate and still don't know how you can leverage business credit to be able to do deals, then there's something that you don't know. It is what it is. And so if you're going into 2021 saying, now is the time that I'm going to really be a student of this, because it's about being a student. It's not nothing quick. I tell people, I don't teach anything. I don't share anything that's quick. There's another video out there for that. There's someone on Instagram, Clubhouse, or what have you, that'll tell you, hey, put this on your application, lie here, and you'll get all this windfall of money. That's not here. I don't do that. You see what I'm saying? So if you want something ethical, and it's a skill set that not only will pay you one time, but will continue to pay you continually, that not only will you know, but you can pass it on to your children, to your family members, to those in your circle, then I want you to go to my website, www.helpmegetbizcredit.com. You'll see the link underneath this video if you want to have a conversation. If you want me to help you get 5 figures in funding, if you want to be my latest success story for 2021, I'm looking to share more of those success stories with people, then I challenge you to go to www.helpmegetbizcredit.com. So that's what it is. That is why a mortgage loan is easier than getting business funding. So once again, this is Aurelia, and I am signing off.